I wanted to thank you for joining me on this episode of Doing Insurance Right. My name is Scott Jenkins, your host. I'm a local farmers agency owner here in Ahwatukee/Phoenix, Arizona. And today I just wanted to go over a little bit more about home policy on your homeowner's coverage. To me, this is one of the most critical ones that we need to make sure we have right, due to the fact this is our biggest investment 99% of the time. So I want to make sure that we have the correct coverage, not any gaps in coverage on this. So we're just going to run through some of the coverages that are on the policy and some that might be available. So let's go over, typically the number one or coverage A is going to be your dwelling construction amount. So this is the amount figured basically to rebuild the home. Now this can vary. Sometimes, the price of the home might be less than the reconstruction. Sometimes the price of the home might be well more than the reconstruction. Couple different reasons. Number one, if it's more than, let's say, the cost of the home, typically, remember, they have to, if there was a total loss, they'd have to clear debris, they'd have to, permits, and lots of other things that want to be involved, inspections, so on and so forth. If it's the dwelling amount is less than the price of the home, typically that has to do with the spot or the land, has a lot to do with it, or the popularity of where the home is. A lot of times, for example, in our area, there are a lot of zip codes where people desire to live in those zip codes or those areas. So your dwelling amount might be $400,000, but your home might sell for $600,000 just due to the fact of the lot, land, and popularity of the area. The second one you're going to want to look at is separate structures. So do we have any structures that are not attached to the home? Those can vary. Dollar amount, what you're looking at. Typically 5% of the dwelling is going to be the minimum. Most of the time you're going to see 10%. So if your home is $400,000, you're going to see $40,000 for separate structures. That's pretty common throughout the industry on that. Then you're going to get into personal property is going to be the next one. This one, a lot of people get confused on and do not have enough coverage. So personal property is going to depend. Basically, if you take a video of everything in your house and kind of run through it, and what you have and how much it's going to cost to replace new. So if you have a replacement cost on your personal property, remember everything in there we're going to buy new again. And where most people struggle to figure out an amount is I could go into your closet and you've accumulated clothes maybe for 10, 20, 30 years of shoes, clothes, handbags, whatever it may be, and I'm going to find a lot of dollars just in your closet alone, not even considering like refrigerator, washer, dryer, furniture, artwork, paintings, knickknacks, TVs, electronics, iPads, whatever it may be. There's going to be quite a bit of stuff in there. So just make sure you have plenty of personal property. A lot of people undervalue what they have. If you had a fire and lost everything, how much money is it going to cost to replace it all? The next one's going to be what they call loss of use. This one is an important one for a couple different factors. A couple times you may use it. If the house is uninhabitable due to a fire, flood, whatever it may be, this is the account where we can move you out of the home and provide housing for you. This is where the money comes out of. So typically you're going to find those anywhere between 20 and 40% of your dwelling amount. So we'll take the dwelling amount at 40,000 or 400,000 again. 20% of that's going to be $80,000. So that's the amount that's set up for alternate housing for you in case the house is uninhabitable. Now, can it be uninhabitable because of another thing? Let's say you live near a fire line or something to that effect, and there's forest fire, or there's been an evacuation in the area. If you're forced to evacuate, that same account, loss of use, does come into play. Your house might not be damaged, but the authorities are telling you that you have to leave. So that would be another one for loss of use. The next one's the biggest one to me, and this is going to be personal liability. This is going to be you're basically getting sued account. So if you had somebody doing some work for you, let's say on the roof, and they fell off the roof, or if they were cutting grass and somehow got their foot in the lawnmower, or whatever it may be, if you do get sued, this is where that account comes out of. So personal liability, a lot of times you're going to see a standard in the industry of around $300,000. There's also options of 500,000, a million. Farmers even has 2 million available on the personal liability. Here's the thing with the personal liability. It is not that expensive. My recommendation is you can never have enough, especially if anybody's doing work around the house, or even if you have somebody you know over that gets injured. Sometimes, it can come down to the point where they have to sue, or, it needs to go past what we have in our medical allowance. Therefore, it would come out of personal liability. The next one, you're going to see medical payments to others. That's going to range anywhere typically from $1,000 to $5,000. So, if somebody, let's say, was over and they were helping out and they hurt their hand, they put a staple in it, or they had a nail gun and it went through, or they were hammering something and hit their hand. This is something we can take them to the emergency room. We do have coverage for reimbursement on that. Medical, like I said, typically anywhere between $1,000 and $5,000 is what you're going to see. Like I said, the main thing is to make sure you have plenty of personal liability to cover that. And then the deductible, there's going to be a couple different deductibles. Typically you have what they call all perils. So all perils basically refers to all incidents. So that's going to range typically anywhere from $500 to $10,000, or maybe even $20,000 if you are trying to, have a big home. Remember, this is the risk that you take upon. So if it's a $10,000 claim and you have a deductible of $1,500, your deductible of $1,500 gets paid first. Then the insurance company will pay the $8,500 after the fact. So just keep that in mind. This is your risk. So the more risk you're willing to take, obviously the lower your premium is. Now there's all kinds of other little intricacies basically through a home policy, whether we need to bump up in, let's say we have an expensive wedding ring, engagement ring, we have some artwork, we have expensive jewelry, things of that nature. Sometimes what you hear the word called floater. So basically that's an individualized item within the policy that's going to be there as well. Then there's also some other small things. So what they call water sewer backup, there's separate coverage for that. There's also going to be a fungi or mold coverage that's also available. And then there's going to be some other small ones too, like what they call concrete tunneling, covering the drilling portion. Farmers is one of the few agencies that actually offers that. And then there's some other small ones. So if you have any questions, feel free to get a hold of us online at scottjenkinsinsuranceagency.com, or you can call us as well at the phone number listed on the website, and we'd be more than happy to help you out, explain maybe your current home coverage and where the gaps might be. So I wanted to thank you for joining me on this episode of Doing Insurance Right. I do appreciate you listening to this podcast. And as always, if you could rate, review, or subscribe to whatever platform that you're listening on, whether it be iHeartRadio, YouTube podcast, Google, Apple Podcasts, Stitcher, Spotify, and all the other great platforms out there, I greatly appreciate it. Thank you, and I look forward to talking with you on the next episode.